because it's not fraudulent in nature, it can't color the other.
We were talking about Coinbase and them being a surveillance partner for Valkyrie. What does that mean, the surveillance partner?
Yeah, what they want to ensure is that there are mechanisms in place to prevent market manipulation, like front running, or if there's an entity that is acting as the exchange and the broker and the custodian and all of the different financial services apparatuses for the consumer, then there is a strong incentive for them to have visibility into the order book and to front run trades and to manipulate the market for their advantage. Binance has done that a little bit. I think most people would agree with that. And so they've sort of abused their position as a market leader with the greatest amount of liquidity and trading volume. So that's what this is. The real question is, does Coinbase have a large enough percentage of the trading volume to act as that visibility into the market? Now, of the global trading volume, maybe not, but of US Bitcoin spot trading, yes. I think that's pretty significant, and an argument can be made that Coinbase does have enough of that volume.
And then because it was like a week ago, the SEC's coming after Coinbase, and so it's like, it's such this topsy-turvy back and forth world where it's like, are they out of business? And then all of a sudden, hey, they're the leader of the pack. Like, almost,
it can be confusing.
It's very confusing, especially if you're I don't want to say an outsider, but maybe on the peripheral, and you're not like consistently consuming this type of news.
Yeah.
Yeah,
you're right. I mean, you've got two different things here, right? One is the Bitcoin ETF. The other is the SEC Wells notice and now lawsuit pertaining to listing securities, unregistered securities on Coinbase. So they have to be looked at in two totally different lights, although they both affect the balance sheet and the bottom line of Coinbase. The SEC is supposed to have totally different points of view on that, and one of those can't color the other.
Mm-hmm. And so
let me rephrase that. Because it's not fraudulent in nature, it can't color the other. Now, if the SEC lawsuit, if there was like a fraud case out against Coinbase, then that would color the application for them as the market, depth monitor. But because it's not fraudulent in nature, it doesn't apply.
And then you touched on it earlier when we were talking about BlackRock, but you also have like Fidelity. Like, what's the similarities? What's the difference between with like Valkyrie connecting with Coinbase? And is BlackRock doing the same thing? Is Fidelity doing the same thing? Is Coinbase doing it for everybody? And it's just the story we referenced just highlighted Valkyrie. What's the differences? What are the sames?
I think
similarities.
I think the prevailing wisdom is that you should go with Coinbase because it's the only publicly listed exchange in the U.S. There are others that are publicly listed in other parts of the world, but if your audience is the SEC, just go with Coinbase because they're publicly traded and are regulated at a degree that not other exchanges aren't. So I think that's the prevailing wisdom. And Fidelity and BlackRock are obviously the two 800-pound gorillas in the room. BlackRock being the largest asset manager in the world, and Fidelity, not far behind them, as surprisingly a privately held company, right? Fidelity is not publicly traded.
Where's Valkyrie in that list?
I don't know exactly. I would say far lower than BlackRock and Fidelity, though.
Mm-hmm. Well, one thing that I saw that like Valkyrie, they tried to get an ETF in January 2021, and then they did get their Bitcoin futures approved in May of 2022. So in terms of the big other, the Fidelities and BlackRock, are they ahead of the game? Because you earlier talking about BlackRock trying to get on that list. Is that list public so where's Valkyrie on that list?
Yeah, we'd have to look it up and see. They're towards the front though. And the reason why the order of things matter is because there's all of these time frames by which the SEC has to respond to these applications. So if you're earlier on the list, then your response will come earlier, and therefore the SEC's response will come earlier. And it's just kind of going to roll down the track as the weeks go on. Yeah, so that's the motivation for these companies to
and I know you're not a financial advisor, but like that doesn't mean you're not intelligent on the stuff. But like when they execute a term sheet with Coinbase, what does that mean? What effect does that have? Is that just another domino in the things that you need to get done before you can go live with a thing? Like what is the impact of that?
Probably very little to the consumer. That's just going to be the term sheet, like for how the business relationship is going to work between Coinbase and a Valkyrie, or Coinbase and a BlackRock.
Okay. Had a question, Ross. I'm curious, how much institutional buy-in do you really expect from a BlackRock ETF approval? Are there any large companies still waiting for this?
Yeah, it's a good question, Ross. So there's been speculation that on the first day that this is approved, that you could have significant, several $100 million of investment to a spot Bitcoin through that ETF. And that is, I think, reasonable. I want to say that in the record opening for a ETF was about $1 billion. And so I wouldn't be surprised for $500 million on day one, which is enough to move the needle in an asset class like Bitcoin that is so supply constrained. So in aggregate, I think you'll see billions of dollars of liquidity come in through these ETFs because institutional capital it feels so hamstrung. Pension funds, really family offices are the only ones that are able to access exposure to Bitcoin right now because they just have different operating agreement or different regulations and rules, because money managers are just under so much more scrutiny. RIAs, pension funds, their RIAs are under regulatory scrutiny, pension funds are under regulatory, and also their pension holders. So it's like a political concern for them. They don't want to go out on a limb and be fired because their pension holders are pitchforks and torches at the door. So I think it will bring in quite a bit. I mean, my money's on 500 million on the first day, and then several billion in the weeks that follow.
Hey, it's Amy. Click over here to subscribe, click over here for more content, and we'll see you next time.